If you have ever felt like you are starting to finally understand how markets really move, this is for you. In this video, I am going to break down smart money concepts in the simplest way possible. No noise, no distractions, just the structure and logic behind how the big players actually trade. Most of what you will find online still revolves around old school retail ideas. Buy at support, sell at resistance, but when you start asking how institutions actually move price, the internet goes silent. This method isn't magic, it's just the real mechanics behind how money flows. And once you get it, you will never look at price the same way again. Let's go over the key concepts so you can apply them and finally start reading with clarity and confidence. Let's make this simple. If you are aiming to be consistently profitable, understanding two key concepts, break of structure and change of character, is non-negotiable. Here is how it works. In an uptrend, price moves in waves, higher highs and higher lows. Every time price breaks a previous high, that's a bullish break of structure, a sign that buyers are still in control. Price breaks the high, that's a bullish break of structure. Price breaks the next high, another break of structure. This continues until it doesn't. Eventually, momentum slows down and price starts to reverse. But how do we know it's not just a pullback? That's where a change of character comes in. For a real reversal, price needs to break the last higher low, not just any level. Once that level is taken out, it signals that sellers are stepping in with strength. That's your CHoCH or change of character. The first clue of a shift in control, but here's the key. That shift, the CHoCH, is only valid when it happens at a meaningful area, like a supply or demand zone or an order block. The stronger the zone, the more reliable the reversal. This low is more reliable than this low because this low broke the recent high, the previous high. So this low has a order block or demand. Now you are in a downtrend, price starts making lower highs and lower lows. Each time price breaks a previous low, you have got a bearish break of structure. Break of a low, that's a bearish break of structure. Another break, you are in a solid downtrend. Essentially, just like before, that momentum fades and price flips again. You will see another CHoCH, but this time it's bullish, breaking the previous lower high. That's the full cycle. Break of structure equal trend continuation. CHoCH or change of character equal potential reversal. And the strength of your zone decides how cleanly it plays out. This is the foundation of smart money concept. Everything else builds on this. Let's get into one of the most powerful and misunderstood setups in smart money trading: liquidity grabs. You have probably been stopped out right before price goes your way. That wasn't bad luck, that was a liquidity grab. Here is how it works. First, you need to mark a strong zone, not just any level. I'm talking about a clean supply or demand zone on a higher time frame, like the 1 hour or above. Higher the time frame, stronger the zone. Now watch what price does as it approaches that zone. Let's say price breaks below a recent low, just enough to trigger everyone is fear. Sellers pile in, thinking the downtrend is continuing. What do? They place their stop loss below the last lower high. But here is the trap. That break wasn't real. It was designed to hunt those stop losses. Once enough liquidity is collected, basically all those stop losses waiting to be hit, price snaps back in the opposite direction fast. That move from fake out to reversal is your opportunity. You don't enter on the breakout. You wait for the stop hunt, then enter on the reversal right around the zone. This isn't theory, it's how price really moves, engineered by the big players. Once you start recognizing this pattern, it's like seeing the game behind the game. Alright, let's talk about another key piece in smart money trading: order blocks. Order blocks are zones where the smart money steps in. These are the footprints left behind by big players, banks, institutions, algorithmic systems, and if you know how to spot them, you will start to see the same setups again and again. So how do you find them? Simple. Look for strong reversals, not small pullbacks, but sharp, clean moves where price flips direction with clear momentum. Let me break it down. When price rallies up and suddenly drops hard, that origin point, the last candle before the fall, is your bearish order block. When the price dumps down and then snaps right back up, the last candle before the reversal is your bullish order block. These are the areas where big orders will likely place. Now here is the key. When price returns to one of these order blocks later with clean structure and timing, it's not random. That's often your entry zone. Smart money doesn't chase price. They let price come back to their levels. You should do the same. And just like we covered with liquidity grabs, combine this with structure, like break of structure or change of character, and you have got a high probability setup. Up next, I'll walk you through a complete setup examples using both secrets together so it starts clicking for you. Step 1. Start with the higher time frame. I begin on the 1 hour chart. That's where I get my structure and context. The first thing I do is mark my key levels, supply and demand zones, based on where price has reacted before. Take US30 for example. You will notice price has moved quickly and left a supply zone with strong movement. That tells me this is a valid supply zone. Step 2. Look for liquidity grab. Now, once price takes liquidity and reverse in our US 30 example, price pushed below the demand zone, triggering stop losses. That's your signal that trap has been set. Step 3. Wait for change of character. I don't jump in yet. I wait for confirmation, specifically a change of character. This happens when price breaks the last internal low, showing me that the structure is shifting. Once CHoCH is in, I am dialed in. Step 4. Find the fair value gap or the imbalance. Now I look for a fair value gap, the imbalance created when price moves quickly and leaves inefficiency behind. Here is how I mark it. Use the wicks of the candle before and after the strong move to throw a box. That's your FVG or fair value gap. There are two ways to trade it. You can wait for price to touch the middle of the FVG and show signs of rejection, or you can act as soon as price taps the edge of the FVG. Both are valid. I personally prefer waiting for a bit of confirmation, a subtle weak reaction or momentum slowdown before I enter. In our example, price tapped into the fair value gap or imbalance, rejected it, and started moving down. That's when I entered. Of course, in this example, you will have to go to 30 minutes or 15 minutes. This week can be two candles, one candle up, second candle down. Stop loss above the FVG candle. Target, I aim for structure targets or 1 to 3 minimum. Before we dive into any trade, start by identifying strong supply and demand zones on the 1 hour or higher time frame. Look for areas where price has taken a liquidity. That's your clue. Let's take USD CHF as an example. First, mark a key zones. Wait for price to fake out. As you can see here, price swept liquidity of these lows, recent lows, or you can call it double bottom or equal lows. Then price may change of character. Now we need to identify our demand or order block. The only candle that has FVG or fair value gap is this one. Maybe you can argue that this one caused the move. It doesn't matter. Where is our fair value gap or imbalance? Let me zoom in. After mitigation, now you can either place your order limit at the tip of the fair value gap or in the middle. Stop loss below the order block or demand. Take profit the recent high. As you can see, this trade netted 4.7 R. It is that easy. Let's see an example of supply. The last move that caused a change of character or break of structure is this candle. You can call it supply or order block, whatever. Anyways, there was a liquidity sweep or liquidity grab happened here. We have our first change of character. Price left large candles with FVG or imbalance. You can argue that this one you can argue that this low was broken, that this break of structure, but you can also call this one a break of structure. Since this has a lot of wicks, this look like a liquidity grab to go down. You can either set limit order below the FVG or in the middle. Stop loss above the supply. Take profit below the recent low. As you can see, this trade hit TB3R. There is another way to enter this. As soon as you see this rejection candle, you can set sell stop below it. TB, same thing, or you can even target 5R. You can set the stop loss above the candle, but just to be safe, set it above the supply. You still get the 3R, so it's a win-win situation. This setup often gives sniper entries and a high risk to reward ratio. Sometimes price taps only the edge of the fair value gap. Don't always wait for the middle or you will miss entries. If you repeat this process again and again, you will get consistent wins. At this point, you have seen this strategy work again and again. It's simple break of structure followed by change of character. From here on, I will be referring to it as the break of structure and change strategy. Clean, easy to remember, effective. Now what matters most is this: practice. Understanding theory is just the beginning. You only start to master smart money concepts when you apply them daily on your chart. Not once, not twice, but consistently. Look back at your previous trades, mark the break of structure, mark the change of character, identify fair value gaps or imbalances, see how often price respects them. The more you repeat this, the more natural it becomes. If this video helped you grasp things better, feel free to let me know. That's all I ask. And it tells me whether to post more strategies like this. This strategy is an old version of my current framework strategy. And if you are still here, I appreciate the focus. You are already further along than most. Let's keep building, one setup at a time, because as always, you are just one trade away.